Good morning. It's Friday, January 17th, about 6 a.m. Central Time. So overnight, the precious metals, they are retreating just a bit. This comes after three strong trading sessions following last Friday's reversal lower with that stronger than expected jobs report. So the tailwinds this week have been that weaker PPI and CPI data where we're starting to draft higher. So you look at the year-to-date performance because a lot of people are concerned and they ask about these questions here. Is this market getting a little bit of ahead of itself? So you start looking at the performance leaders. Again, it's going to be heating oil, natural gas, and soybean oil. You get to copper. That's your fourth best performing commodity year to date, up about 10.22%. You've got crude oil futures up 9.75%. Many of you have been long crude oil. We started to pare back some of that on news that we have a peace agreement going on over in the Middle East at the moment here. And then much of these sanctions and things like that, I believe, have been priced in a lot of these markets. You get to silver, that's going to be about your eighth best performing commodity, up about 7.4%. Palladium up 4 3/4, platinum up 4.7%, and then gold up about 3.71%. The dollar index only slightly higher year to date. So we look at some overnight headlines, some things that I'm watching here. So last night kind of was a big night in the markets here because China, they came out with a lot of their economic data. Their economy grew more than expected last year, but the danger in the markets, and a lot of the markets kind of retreated as far as commodity related that China imports in the overnight, is that Xi Jinping kind of eases up on the stimulus because of the fact they want to see, it's a wait and see on how these tariffs play out. So their GDP rose 5.4% in the last 3 months from a year earlier. That exceeded the analysts' expectations, and it marked the fastest pace in 6 quarters. So that's where you get your crude oil going up, your agricultural markets they import, your copper markets all pushing higher here. So copper, it headed for an 8th day of gains and its longest winning streak since 2017. That was because of this economic data came out. It kind of brightened the demand outlook. They are the top copper consuming nation out there, and they are also massive consumers of the silver market. Now oil, it heads for its fourth straight weekly gain as the U.S. sanctions pose some kind of growing risk to the global supply in a market that's already been tightened, and it really tightened up because of the cold weather that we've seen. So that's kind of your overnight picture here. Now, if you look at the gold market, gold did retreat in the overnight session. So we look at where we're at here as far as price action, down about $8.70 at $27.42. Low of the session was $27.28, high was $27.48. So we're definitely coming off of the lows. The news that I saw out there was Kazakhstan Central Bank said it would sell gold purchases from its domestic production to the international markets and try and raise dollars. It's a bid to shore up its national currency, which hit a record low this week. Many of the different foreign currencies out there are hitting record lows. That's why a lot of people out there that have been long gold, for instance, have been short things like the euro currency, the pound against it, Mexican peso, all different currencies, trying to take that dollar element out of your long gold position. Because if you look at gold against many foreign currencies, it's made new all-time highs. Gold against, in US dollar terms, is kind of middle to higher end of the range here. And technically, if you look at the charts, you could see that it's running into some resistance points. So we want to look at some things here like where the Fed's at, what their path is going forward, and you look at some of the economic data that's coming out. So it's still just a 2% chance that they cut rates in January. You got to get out to June where that number really starts to slide down. So you're about a 70% chance that the Fed cuts rates in June. You go out to October, it's much higher than that. It's about 85% chance. So 2 interest rate cuts are kind of floating back in the cards, and that's where this market started to draft up. You're going to see a lot of producers, a lot of miners and things like that really start to take advantage of these higher gold and silver prices, especially running back into these resistance levels, and they'll start to put some hedges back on. Remember, they are just producers. The only thing they care about is their bottom line. They don't necessarily care about the price of gold. They look at taming their input costs here and selling to to have calculated profit margins. Now today we'll have industrial production, which is supposed to have a small uptick here that may play some impact on some of the metals, on interest rates and things like that. You start getting into Monday, it's a bank holiday with MLK and the inauguration. You go to Tuesday and Wednesday, not really much out there. Thursday's your unemployment claims, your natural gas storage, your crude oil inventories, and then Friday you're going to have your flash manufacturing PMI and your services PMI. The manufacturing PMI is the one to watch because it's been below the 50 level. Remember, that's one of those diffusion type indexes where over 50 shows expansion, below 50 shows contraction. We really want to see that number start to pick up, and then you're going to have your University of Michigan consumer sentiment and excuse me, also the inflation expectation. So oil futures making a new low on this. And then if you look at the S&P 500 overnight, kind of broadening out as far as the rally here. We saw Apple, one of the biggest losers, but we're starting to see other things like some of the banks, the regional banks and things like that really start to pick up. Bitcoin is one that a lot of people were buying in the low 90s to kind of the mid 90s, that 95 to 92 area. And then we shot back up. We got to this 97 to about 100,000. A lot of people let some of those contracts go. Now we're back at about 103,000 and people are still selling more Bitcoin up at these levels here. They're just looking at booking some profits ahead of Trump coming into office here. And the thing is that there's a lot of speculation that Trump's going to announce, a Bitcoin strategic reserve, an Ethereum strategic reserve. You also have Litecoin applying for an ETF that looks like it should be approved. So a lot of good things in the crypto space here. Crypto should be an asset that does become some part of your portfolio really going forward because of the fact that it's stabilized itself. It oftentimes acts as a different asset class to try and benefit from. So if you look at the metals and you look at the current trends right now, the only one that's really still kind of neutral to bullish is that silver market. And of course, palladium has been really the big dog. Gold and copper and platinum have all been quite bullish, but the platinum market has retreated recently. Platinum's a market that tends to trend, so you get like several sessions in a row where it goes up. Then when it breaks, it generally just doesn't break once, it breaks at least like 3 to 5. So if you're an Elliott Wave guy, maybe take a look at that platinum market. It might be able to give you some insights on where it's going. So when you look at the gold market, again, bullish trend right now. Critical levels of support, I think, are 2,700, then 2,669, the 50-day moving average, and a trend reversal point at 2,630. We break below there. I think that we're going back into more of this consolidation type pattern we've seen. Consolidation is healthy because if you look at the way the gold market works, is it consolidates, then it's broken out, reaches a new high, consolidates, breaks out. So take that consolidation as a sign of strength in there. But what I don't like about the gold market is that you start looking at like the November 25th high just before Thanksgiving. We had that big drop off on that particular day here. We fell about $95. So that was a big sell off right there. And then on December 11th, we rallied back up, same thing, kind of retesting that 2750 to 60 level, and then we started to decline once the Fed meeting came back out. Now we've broken back down to support about that 2600 level, and then we start to rise again. So now we're retesting those three highs on the charts. That's why many of you working closely with me, we've been reducing a lot of our positions going up. We'll maintain some upside exposure or some type of way to play if there is a breakout and would be quickly to re-enter the market. Part of the other reason why we've been reducing positions is because many people were trading the February contract on gold, which is set to expire here or will roll over in about the next week or so. So my advice to you is to start looking at April or June if you're going to get into the gold market. Looking at silver here, again, you really need to see that breakout over $31.93 and a close over $32 in order to really accelerate those gains higher. $32.50 has been a strong resistance point, and then about $34 to $35 is another resistance point that you'd want to see here that the market would need to breach. Many people, the way they play this silver market is they'll trade that range back and forth, taking some positions off, adding some positions on those dips here below the $30 range. Call it 30 to 28 is your kind of critical level, long-term support. $30 would be your first kind of test of support, but you get into the resistance, it's like this 32 to 32 and a half. But what people will do is they'll go farther out and they'll look at things like $35, $40 call spreads. If you get that breakout to the upside, you took some of your exposure down, you have calculated risk going farther out. Now copper, excellent trending market right now. The market has really exceeded much of what I thought it was going to do here because of the fact that China has been kind of throwing everything at their market or at their economy to try and support it. So big trend, a lot of people went long copper near that 405 area. It was a double bottom long term on the charts. Now we've strung together one of the best performance since 2017. We'll see how it acts around the 450 level. Historically, that's been a pretty decent resistant point. And then you do have platinum futures consolidating about the last 2 days. So platinum generally trades from about this 915 to 885 area is kind of your big support levels. And then $1,000 always acts as this psychological resistance, at least recently in the platinum market. So you see people play those ranges. Now that we're consolidating and the trend reversal point being very close, 933, I anticipate that some people come into that market here with a quite tight stop on there. So Monday, I'll be back in Florida here and back to the old routine. We've entertained a lot of client dinners. Again, if you want to be a client of Blue Line Futures, be sure to send an email to info@bluelinefutures.com. We are revamping some of the metals research here. We're looking at creating a metals dashboard here where people can log into and see what are the different things, the inventories, the interest rate expectations, the performance of the product, and then also some of these trend reversal points and things like that. So on our back end, we've been retooling a lot of things, our metals updates here and our metals dashboard. So once that gets set to launch, we'll have a link to register for that. If you got any questions, again, give me a call, 312-858-7303. Going to be a lighter holiday type volume session here on Monday, but again, reach out. We're going to be talking with a lot of clients, a lot of prospects here about where we think these metals are going. So remember, futures option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.